Good morning, everyone. Shall I drive this? Can I just indulge myself in a quick straw poll? Many salespeople in the room that have targets hanging over their head. Okay, we've got the right audience. Keep your hands up, please. Many of you actually are measured at a gross margin level. Hands down if you're not. Okay, how many of you are measured at a net margin level? Okay. We might form a help group at the end of this, actually, but apart from my 5-year-old kicking me in the head, that's actually the main thing that keeps me awake at night. I'd like to thank the Institute, and thanks to Fiona for basically asking me to come along and talk. If you can just indulge me, I reckon this presentation will take about 35 minutes, but I would like to put some sense of context around ABC. Fundamentally, our environment, as in Bord Gáis Energy's environment, it's undergoing an unprecedented level of change from a number of areas in the own Irish marketplace, across the industry value chain, and more recently across global energy markets. And fundamentally, BGE, we can't influence these factors. We just can't. But we can manage and control our cost base. And through use of ABC, we've got some deep insight into that, and we've been able to actually forensically measure it and manage it. So really, through this morning's agenda, I'd like to do this by giving you a brief introduction to Bord Gáis, talk about a number of these external elements, which will put some context around these items that are outside of our control, and then give you some linkages and case examples around where we've actually extracted some financial savings from within the business. So very quickly, this is a busy slide, but in summary, Bord Gáis was formed in 1974, and the period from sort of 74 to 2003 has been a period of sort of incremental growth, year on year, customers being added, underpinned by network rollout, and fundamentally the whole sort of raison d'etre of the company has been adding headcount or adding customers to the pipes, increasing the average occupancy. From 2009 onwards, it's been a period of accelerated and unprecedented growth. Launch of the big switch saw us go from a customer base of 600,000 to 1 million. We commissioned our 400 megawatt baseload plant in Cork. We acquired SWS Wind Energy, arguably one of the biggest wind portfolios on this island when it will be fully built out. And we also concluded investments in other alternative energy companies such as Wavebob in conjunction with Vattenfall and Thon Energy, and also in the area of tidal as well. What is interesting is over the next 5 years, BGE will invest twice as much in onshore wind than it will in pipes network. That's a really interesting statistic when you consider we're traditionally a gas incumbent supplier. Closer to home within the business, we've had significant structural changes have taken place. 4 years ago, the energy market was there was very little competition in the energy market. Within BGE, the only sales function that existed was structured around managing third-party installers, or effectively it was a distributor channel. As part of the transformation programme, we've put in customer-focused sales structure with adequate back-office support, basically to maximise the sales guys' team in the field and in front of customers. We've segmented on a geographical basis, and all of the account managers sell both fuels, or dual fuel, electricity and gas. And latterly then, in line with sort of recent deregulation of the marketplace, we've introduced a product development function which is critical for us in terms of actually being able to compete. But most importantly of all, we've balanced organisational change with the day job, which is adding market share, but adding market share, profitable market share, as opposed to just any customers. So if I can just take you through these external elements that I've referred to. Firstly, let's take a look at the Irish energy market, and just to put it in some context, there's 4.6 million people in the Republic of Ireland, 2 million households, 1.7 million of them are occupied. There's 190,000 or thereabout, 197,000 thereabouts SME customers in the island, in the Republic, I should say, and there's 1,300 large energy users. Arguably, in my view, the market is significantly overpopulated, not in terms of actually consumers, but in terms of supply companies. There's ourselves, which I've just given you some sense of introduction to. There's ESB, or ESB Electric Ireland as they're now known. They are the owners of arguably the largest generation fleet in this island, and they have significant fuel contracts behind that generation fleet, so they can actually sustain a long-term price war if they wish. Electricity acquired 2 years ago by Scottish and Southern Energy. Scottish and Southern have an operating profit of 1.4 billion in 2009, 2,300 employees. In context, in 2009 we had a turnover of 1.4 billion. Gazprom, the single largest gas supply company arguably in the world. Then you've got the DCC, who own Flowgas, wholly owned subsidiary, and Endesa, who actually own some generation stock, but they don't have a retail presence as yet. Energia, Gary, you're very welcome. Part of the Viridian supply group. You might correct me if I'm wrong on any of this, Gary, and acquired by our Capita BSC in 2006. Then you've got Veyu, who engaged in a strategic partnership with Glencore, one of the largest trading commodity trading entities in Europe in 2007, and as a result they own 27% of that company. And then finally Phoenix, they're owned by Kellen Acquisitions. Kellen are a vehicle of Terra Firma and Capital Partners. So in summary, there's a significant number of large-scale players with large amounts of private equity invested in this marketplace. But to put it in context, the total gas market in Ireland is equivalent in volume terms to that of Manchester. You know, the available market clearly in the UK is significantly larger in customer terms, and there's only 6 main supply companies. So what? Okay, as I said, there's a large number of supply companies. The Irish energy market is now acknowledged as being one of the most competitive in the world. That's good news for customers. The catalyst for change could be, and I say could be, I'm not offering any sort of speculative comment. I know there's a video at the back of the room there. Increased merger and M&A activity could see private investors exit some companies. It's a stated intention of the state to target up to 2 billion in sales of non-strategic state assets. That's as outlined in the Government for National Recovery 11-16 plan. And they'll do that through New Era, which is the New Economy and Recovery Authority using the National Pension Fund Reserve. In terms of profitability and turnover, we are by no means the biggest. And BGE needs to be efficient to compete. If I could just talk to you a little bit about the value chain, the overall industry value chain. The traditional value chain, as you see here, it's very linear in structure. Energy flows pretty much go from left to right, and the roles are traditionally performed by specialists. So in an Irish context, generation, traditionally ESB, that's changed. Distribution and transmission, still ESB. Supply was ESB, however that's significantly changed, as you've seen from my last chart. But most significantly of note, data is constrained by the number of meter reads within the overall marketplace per annum. That's arguably, this is core. Data is core to understanding how customers use their energy and helping them to use less. So if I could just take a look at some of the wider drivers for change. Politically, Europe is committed to the 20-20-20 obligations, and that has implications for Ireland, which effectively means that we need to use 20% less greenhouse gas emissions. We need to have 20% increased share of renewables, and we need to reduce energy consumption by 20%. The entrance of decentralised generators and accommodation of renewable energy sources, that has already fragmented the value chain, and I'll talk to that in the next slide. But however, of single most importance is the impact that technology improvements and advancements will have on the value chain. The fact is, as I've said earlier, data drives insight into energy consumption. And equally, real-time data will drive innovation by supply companies in the area of tariffing. So in this new, as I call, open source collaborative environment, arguably we're looking at ICT and energy convergence. If not an overlap, it's definitely convergence. So what you're looking at is energy flows from multiple sources, and it becomes more unpredictable when you factor in renewables. The wind doesn't blow all the time, but when it does, wind suppliers need to come on first in the order of merit. It's estimated that data volumes in this new environment, this isn't slideware by the way, this is reality, that'll increase by 3,000-fold. So if any of you have an ICT background, that's a significant opportunity from a multiple perspectives. But this has also led to what I'd call non-traditional energy players moving into the industry. There's a big prize to be got here in the area of data and the ownership and the actual the managing of it. And this makes, from a technology point of view, it makes the potential for closed-loop managing a reality in terms of the network. And it also makes real-time balancing of supply and demand a possibility. Point here, we can't influence this change. But to compete and to capitalise, we need a lean cost base and we need absolute clarity around our costs. Apologise if I haven't depressed you yet. The third point, there's a considerable change happening in the global energy market, and most recently in terms of volatility. Fundamentally, Ireland's a price taker. You know, we can't influence the price where the energy comes in here. We're 85% reliant on imports for our energy needs, and 65% of that is dependent on oil. So I'd like to just give you some sense of context. This is a 101 guide to what drives sort of the outlook for oil. Clearly it's supply and demand. Global economic growth has an impact. Investors and speculators dip in and dip out, and they influence it quite significantly. But what's of note is the point at the bottom here around geopolitical issues. That has a significant impact. So if I just take it to the who's who in the oil world, this is pretty much who owns the oil reserves. Summary takeaway here, and I do appreciate that the font is quite small, is very interesting. 48.2% of the oil reserves are across Saudi, Iran, Iraq, Libya, and Nigeria. Clearly there's a lot of external factors that are influencing the energy sector in Ireland. We can't influence these fundamentally, but they have a significant impact on our business. We currently operate in Bord Gáis Energy in a hyper-competitive market, arguably, and regulation is still an influencing factor, and gross margins are thin. As a lead into ABC, I'd like to give you a simplified version of what we sell. As commodity salespeople, we sell energy. Arguably, in the next generation or the next evolution of the market, we'll sell light and heat and core production components. But for the purpose of this presentation, this is to show you what's in our control and typically our typical retail returns. So what I've taken here is a typical example of an SME customer on a per €1,000 per annum spend. For information, an average SME customer spends about 6,000 a year on energy, on electricity energy. So 46% are network charges. They're made up of TUIS and JUIS, industry acronym, transportation use of system, distribution use of system, and standing charge. In the main, these are outside of our control. They're reviewed annually by the regulator, the CER, and price increases or changes are determined. The other 54% are energy charges made up, and they're influenced by our cost base. And we pretty much have we control or try to manage our cost base through use of our trading team, and that's determined by our hedging strategy and adherence to our risk policy. But in the retail market, we're looking at the moment low-digit percentage gross margin. So profitability is absolutely key to our business, both at a gross margin level and equally at a net profit contribution level. Our key metrics on the far side you see there: cost to acquire, serve, retain, win back, and by customer, by channel, and we measure that. Equally, churn is of equal importance to us. When you consider that an average SME customer spends 6,000 per annum, so arguably that customer needs to stay with you into month 11, month 12 of a relationship. These key metrics, they help to inform us around channel choices and product decisions. And as part of managing channel efficiency then, on the third box here, we also measure sales force activity. But equally, since we adopted ABC, we can cost it. You can all read that.